The upcoming 6 stocks are trading at a massive discount and are ready to take off sooner than most people think. Because in the upcoming week we will see the end of the government shutdown, we will have the legalization of crypto, 50-50 chance for rate cuts, and the tariff deadline. So a lot of things to look out for and could have a positive impact on these 6 stocks. The first stock is called RedWire, and this company is an unstoppable growth machine, which is sitting in the space defense and space infrastructure sector, but they're recently also supplying drones/UAVs to Ukraine. The stock price of this company got absolutely crushed because of missed earnings and missed EPS numbers. That's mainly because this company is very dependent on government contracts, and with the government shutdown, all these contracts are delayed and are expected in the upcoming quarters. So this company has a bright future. They are expecting that their earnings per share will grow by 90% the upcoming 12 months, and for their revenues they're expecting an increase of 55%. While this company is trading at a price to sales ratio of 2.7. And furthermore, our analysts projecting that the stock price will increase by 50% and in the bullish scenario 380%. Just think about it, that's almost a 5x. Then you might ask yourself, there must be something wrong. They must be in massive debt. Well, that's luckily not the case because they have $170 million in cash that they can burn if they want to, and that's exactly what they're doing. Analysts are expecting that the company will become profitable early 2027. And then trust me, Wall Street will suddenly love this stock. Remember, this company was only focused on being a space infrastructure supplier, but it's now transitioning into space defense, which opens a lot of contract opportunities with the government. Now, what's so bullish about this company is that with its recent acquisition, and now with Trump, who is very interested in space, especially now that they're in a kind of cold war with China, that will increase the demand from governments for advanced space defense systems. And now that the government shutdown will end on Monday, all these new contracts will flood in. The next stock has probably the cheapest valuation in the stock market, and it's called BTDR, also known as Bitdeer Technologies, which is a crypto miner that is turning into an AI infrastructure player by transforming their Bitcoin mining centers to data centers, and you can see that in their forecasted numbers. For the coming year, they're expecting an EPS growth of 150% and a revenue increase of 190%, while they're only trading at the price to sales ratio of 5. This truly doesn't make sense. The stock price got absolutely crushed lately, and it's absurd how cheap the stock is right now. It went down more than 60% from the all-time highs, and you want to know the reason for that? First of all, a little bit more losses than expected, but at the same time they beat their earnings, so it's definitely not the end of the world. And furthermore, a fire broke out in one of their facilities, which destroyed 2 of 26 buildings under construction. And they stated no mining equipment had been installed at that moment in time, and the company doesn't expect this incident to have an impact in their current operational Bitcoin mine hash rate, which is a fancy way of saying how fast and efficient they're mining their Bitcoin. And the third element which drove this stock down is that last week all the data center companies were basically getting crushed, so this would be the best time to open a position in this stock with all the possible bad news already priced in. And if you want to look a little bit more into the future, these are the revenue numbers that analysts are expecting for this company. So a very nice year-over-year revenue growth rate with these EPS numbers, and that will mean that the stock price in 2028 with a PE ratio between 30 and 50 would surge basically 400%, and in the bullish scenario 750%. So this is the reason why this company is looking so attractive right now, and that is why I'm buying every share inside. The next stock on this list is called Applied Optoelectronics. This company just started their turnaround with major AI cloud customers, because this company is providing products that's enabling rapid data transmission, which is essential for cloud computing and hyperscale data centers. Furthermore, if you look at the EPS chart, it looks beautiful, with the EPS turning positive next year, and the revenue chart is looking even better, going from 60 million in Q3 2024 to 200 million 2 years later. Right now they're trading at a price to sales ratio of 3, which is not that expensive. Analysts got a mixed opinion of a 30% decline, and in bullish cases an 80% increase. Now if we want to look a little bit more into the future until 2028, here you see the revenue numbers. They are growing on average 45% every year, and these are the expected EPS numbers. With a PE ratio between 30 and 40, then the stock price has the potential to increase by 200%, and in the bullish scenario 300%. So this company has a bright future, and it's definitely worth putting on your watch list. The next company is called Microbot Medical. This company is generating 0 revenue, but next quarter this will change, and this will change dramatically to the point where they will make 14 million in the second quarter of 2026. But what is the focus of this company? Well, it's robotic and micro-robotic technologies for minimally invasive surgery. The funny thing is that right now you can't calculate the price to sales ratio because they aren't generating any money. So we're forced to look a little bit more into the future. For their year 2025, they will basically have only 1 quarter where they will generate 5 million. And if we look at the numbers for the upcoming years, I will switch to my Excel sheet. You will see that analysts are expecting revenues of 70 million in 2026 with an EPS of 0.1. That means if the stock price has a PE ratio of 30, the stock would trade at $3. Right now it's trading at $2. Now if you're growing at these growth rates, this company will trade at much higher PE ratios. Now if you look at the revenue and the EPS for 2028, where you see that their growth rates will decelerate year over year, then it's expected that this company will increase by 600 to almost 1000% with only a PE ratio of 20 to 30. I'm giving it very low PE ratios because I want to take the ultimate bear case, but even in the ultimate bear case, this stock just looks too attractive to pass on, and at $2 it's literally a must buy. If you don't like to take a little bit risk on companies that are not making any money, you can just put it on your watch list and basically sit on the sideline and watch the stock price surge, or you can open a position at $2 and dollar cost average. So this company is a must buy. The fourth stock is QXO. This company is a big play on the housing market. If you believe that houses in the US will start to move again, then you got to own this stock. And especially now that we're expecting rate cuts, which is very bullish for the housing market, because this company is becoming the biggest player in selling construction materials and providing construction workers. If we're looking at their future projections, I made one until 2028 and one until 2030. But for 2028, you can see that the revenue will decelerate from 56% to a 20% revenue increase in 2028, which are still phenomenal numbers. So with a 20% revenue increase, you could at least demand a PE ratio between 25 and 40. That will mean that the stock price will surge between 57% and 150%. I would say a PE ratio of 40 is much more likely. Now, if you want to look at the price to sales ratio, the company right now is trading at a price to sales ratio of only 2.6. Now, if you look over here, this is the price to sales ratio projection with a price to sales ratio of 2 and revenues of 18 billion in 2028. Then the stock price will surge 200% in 3 years, which is much more likely in my opinion. So this company has a ton of growth ahead and remains a great buy right now. Now the final stock on this list is called EOSE. This stock has a ton of potential upside and comes with relatively little risk. Now what this company is making is truly spectacular, and in my opinion this is probably the best stock in the stock market right now. So what this company does is revolutionizing the battery industry by making zinc batteries instead of lithium batteries, which have 2 times the energy density. These batteries are much safer in terms of catching fire and in terms of chemical substances. Furthermore, they are 100% recyclable, non-toxic, and they can operate in extreme temperatures, which is needed for a lot of businesses. It almost sounds fake how good this technology is, but the story will get even better. But first, smash the like button, I would truly appreciate that, and only subscribe if you want to see more videos of me. Alright, so their zinc batteries don't need any cooling systems, which you do need in lithium batteries, and because of this they can be produced much cheaper. On top of that, it's not a rare earth mineral, so they're not dependent of China, and rare earth minerals are obviously much more expensive, and the products of this company is 90% made in the US. And listen here, if I was Trump, I would definitely like that about this company. And it also turns out to be like that, because this company is receiving 90 million annually in subsidies. On top of that, they got a 400 million loan from the government, because the government wants to support companies that are making the United States more independent from other countries like China, and so they can solve the energy crisis that we're heading towards. EOSE also got 650 million in backlog, which is a fancy way of saying future secured revenue. If we look back at the Excel sheet, right now they're only generating 150 million annually. So 650 million secured revenue for in the future is a lot. Apart from that, this company has multiple powerful tailwinds, which one of them is the data center boom. Right now the data center revenue is 22% of their business and it's growing at a very fast rate. They're right now in a 200 billion addressable market, and this company is 4 years ahead of competition and is very hard to replicate. You will need years of research and experience. And last but not least, they have a 22 billion pipeline, which means potential future projects, contracts, or revenues, which haven't been confirmed yet. And these 2 companies are one of my biggest positions in my portfolio, because I like the numbers and I definitely like the story behind the company. And if you look at EOSE numbers, you can see that it will grow from 150 million in revenues in 2025 to $1.4 billion in 2028. As you can see in the year-over-year growth rates, it's literally skyrocketing. Same counts for the EPS, and the outlook for 2029 and 2030 is also looking relatively positive. So I would say for a revenue growth rate of 60% in 2028, a PE ratio of 60 to 80 is 100% reasonable, and that means that the stock price will surge between 400% and almost 600% in less than 3 years. Now smash that like button if you discovered some new and great stocks, and only subscribe if you want to see more content. See you guys in the next one.